Sumeet Nindrajog is a senior partner and co-founder at Paragon Partners, and he joins in to give us a flavor of just that. Good to have you on board, Sumeet. Many thanks for joining in. After the pandemic, it was the second wave that jolted everyone, and I'm sure that a lot of the liquidity, cash flow across the board had been hit for a lot of companies. How badly were things impacted, or do you think that having experienced the first wave of the COVID crisis, that the companies were a lot more prepared for round two?
Good morning, and thank you for having me on. With regards to your question, I think the second wave impact was not as severe, at least from a financial standpoint, in most of our portfolio companies. Companies in the construction, manufacturing, consumer staples space were not as affected as perhaps some of the retail-oriented businesses. Having said that, I think the human impact of the second wave has been far more severe. Infections have been rampant and widespread, which has also impacted morale, as well as some amount of constrained operations at our portfolio companies. That being said, I think as you rightly pointed out, our companies were much better prepared for the second wave. And since infections have come down, the recovery has been pretty swift. I think as with the first wave, the offline retail-oriented businesses, F&B, hospitality, will be impacted more and will be slower to recover. But we have seen a pretty rapid recovery in some of the businesses, as I mentioned earlier, in construction, manufacturing, and consumer staples.
Since you brought that up, just wanted to understand now what the strategy is going to be for some of these offline F&B and retail-related companies when it comes to investments pouring in. Will the tap sort of turn off for some time until we see an incremental recovery? Or do you think that, the hopes for things improving fast on account of the vaccination drive as well picking up are fairly strong?
So I would think that there will be a significant pent-up demand in some of these sectors that you mentioned, and that will start to materialize probably towards the second half of this year. Obviously, pending the success that we have on the vaccination drive, some amount of responsible behavior from our population, as well as some pivots in some of their business models, to be honest. So I think as a strategy, as we have looked at our portfolio, some of the key things that we have done are revenue diversification. So if it's a B2B business, they've pivoted to servicing clients in COVID resilient sectors. If it's consumer facing, they've expanded their product offerings to help with ease of customer experience. For example, we have an investment in Chai Point. They significantly expanded their food offering. They offered contactless experience at the retail stores, contactless experience at offices and manufacturing hubs, so that people could have a safe experience both in the store as well as in their offices. I think the second theme on a pivot has really been tech enablement across the board, whether it's digital or delivery, and sort of expanding the focus there. And the third main thing has been efficiency and cost management. And I think that will bode well for some of these companies when things rebound. So while I think people will continue to be a little bit slow in investing in some of these sectors, I think once the pent-up demand starts to materialize, you will see investments taking place in these spaces as well.
Sumeet, given that your focus sectors also include healthcare and technology, something which has been at the fore of our lives since the outbreak of the pandemic, where within healthcare and technology and the two meeting are you really seeing disruption happening in the unlisted universe?
So I think there's a lot of different opportunities in pharma. I think the development of drugs, the opportunity to export, and India being a hub is a significant area and potential for investment in the pharma space. I think obviously there's also incentives being offered by the government to help accelerate that for global export as well. The diagnostics is another area that we see opportunity and continue to see a lot of deal flow in that space. I think technology, the area that we really focus on is driven by consumer demand and the consumption theme. And as we look at our second fund, which we've done a first close on and are continuing to fundraise on, we have made one investment, which is focused in the consumer space. It's consumer staples. And the second investment, which we will announce in short order, is a very tech-enabled logistics company. I think both companies benefit from the consumer space, but also have a significant amount of technology-enabled offerings, in their businesses. So just to be a little bit more specific, our first investment is a company called Tender Cuts, which is an omni-channel fresh meat and seafood retailer, primarily based in the South, having 26 stores in Chennai and Hyderabad, and launching Bangalore in the upcoming week. But almost 75% of their business is through their app and delivery to consumers. So not only are they able to improve the customer experience using tech, they're also using technology to be better at inventory management, demand forecasting, and effectively helping scale their business. So we remain very bullish about that space. The consumption theme there is also being driven by a shift from the unorganized space to the organized space. And despite the second wave, we've seen almost a 40 to 50% growth in that business since February, which has been very impressive. And with logistics, I think twofold, both from the consumer standpoint, logistics is a very important part of our economic activity. The company that we're going to invest in is, not just tech-enabled, but is largely catering to e-commerce players in the space. So indirectly is also benefiting from the consumption theme, but also enabling its businesses through technology to offer a better experience to their partners in this space as well. So, these are areas that we see as having tremendous opportunity while we continue to look at areas such as healthcare, SaaS-based businesses, IT services that will also benefit from technology as well as the digital drive that we're seeing across the country.
Sure. One of the biggest beneficiaries, Sumeet, of the post-pandemic world has been online education. Is this a space you're contemplating investing in, already are invested in? And what kind of opportunities do you think online education throws up? Because, education as we know it has completely taken a new phase.
No, I totally agree. I think over the last 12 to 18 months, we've definitely evaluated a number of potential transactions in the edtech space. There's a variety of levels. There's direct to consumer offerings. There's B2B2C offerings in the edtech space where they're catering to schools, but offering them digital, ability to deliver experiences to their existing students. There's skill development happening beyond just education. It's upgrading skills to better deal with the new world that's ahead of us. All three opportunities are tremendous. I think we just haven't found the right transaction that we were excited enough by, but we will continue to evaluate opportunities in this space in coming quarters and years ahead. I think EdTech is here to stay, and opportunities will continue to materialize in some of the areas that I mentioned.
Sumeet, what's the outlook when it comes to these MSME companies, and also particularly within the finance space, some of these small finance companies as well, the companies invested in do include some that are within this space. Is that looking interesting as a business opportunity? How have they fared during the pandemic?
Sure. So just taking your question one by one, I think MSMEs as a whole are still capital starved. And that's really where Paragon sees an opportunity. There's 10,000 plus of these companies. They don't have as much access to capital as larger companies or even companies in the startup space where there is a tremendous amount of venture capital money being deployed in that space. The MSMEs as a whole have also suffered more during the pandemic because of lack of access to capital. That has resulted in an enormous amount of deal flow for us. I mean, we see almost 100 deals a quarter of companies focused in the MSME space. And I think with a rebound in the economy, there will be a huge opportunity as the market rebounds for investments in the MSME space. So that remains a tremendous focus for us. We also believe that as we started the program off with, that public market valuations, frankly, have far outpaced private market valuations, and the opportunities to invest in this space at reasonable valuations, especially in the MSME sector, will be very prevalent. We're seeing that, month by month, quarter by quarter, and so we will see our pace of investment really pick up over the next 24 months. Secondly, in the financial services space, I think unlike the first wave, where both dispersal and collection suffered, what we've seen during this second wave is that while dispersals have remained muted, primarily because of a choice by the financial services firms, collections have actually been extremely robust. We've seen this at Incred and SME Corner, where collection levels have been extremely good despite the second wave. I think a lot has also got to do with how the companies adapted from their learnings in the first wave, using technology to not just enable the underwriting, dispersal, monitoring phase, but also ensuring that they were better prepared on the collection side as they entered into potential second and third waves. So I think the outcome of that will be that credit costs, while will increase due to the second wave, they will not be as bad as we saw during the first wave of the pandemic.
All right, thanks very much. We'll let you go on that note. Sumeet, good of having you on board.